Welcome to another edition of Invest or Not to Invest, where we talk about the latest updates and developments on small to mid-cap companies in North America that you might not want to miss out on. Just a heads up, these are suggestions, we present what we pick, but you decide. Now here's one for tech fans out there, and if you're also into the Lord of the Rings, even better, because this huge data analytic company may just turn out to be a titan in the tech sector, and they go by the name Palantir, which may remind those avid Lord of the Rings fanatics of the magical Palantir, aka the Seeing Stones, that were described as indestructible balls of crystal used for communication and to see events in other parts of the world. And that's the kind of stuff this Denver-based company does. Starting out in 2003, this firm provides software that clients can use to integrate volume of data, and this could be in the form of spreadsheets to even images. And once that volume of data is collected by the platform, it allows the data to be analyzed and interpreted much easier by the user. So how is it applied? As an example, their technology assists in detecting suspicious or unusual patterns in large data sets, and this is being used by the CIA and law enforcement agencies in the US. Palantir products are also popular amongst commercial clients as well, like Fiat Chrysler, which uses their tech to identify potential faults in car parts. And then there is Airbus, which uses it to respond to manufacturing problems, and BP uses Palantir products for drilling data. Tech companies that serve high-profile clients and governmental institutions may be a positive factor for investors, but it's also the people behind this enterprise as well that send a sense of security to those who wish to open a position in such a stock. For Palantir, there's a team of 5 co-founders behind this business, and among them we have Peter Thiel. That's the billionaire who came up with PayPal. Now they have a class share structure which includes Class F. The F stands for founders, and the F class holds super voting rights, which ensures 3 of its founders, Alex Karp, Stephen Cohen, and Peter Thiel, 49.9% of the ownership of the company in perpetuity. Now talking of shares, how has PLTR performed in the New York Stock Exchange so far after their initial public offering at the end of September? Well, they started at $9.50 and gradually started to climb in November, where it peaked to $29.05 per share in that month. But since they have started quite recently, it's too soon to say much about their past performance, and who really knows what the future holds for this company's stock. But what the company itself can tell us is that they expect their year-over-year revenue growth in 2021 will be greater by 30%, and revenues have grown at a compound annual growth rate of 18% since 2018. The gross margins in the past 3 years have been decreasing, but well above 50%. In 2020, they had a gross margin of 64%, meaning for every dollar they generated, they kept 64 cents, and it cost them 36 cents. Now, it is common to see such high profitability in the software industry since it does not require expensive capital investments in property and machinery, but they haven't reported a profit yet. When will they break even remains a question, but they do have that nice combination of strong backing from governmental institutions and huge corporations, and an experienced team of co-founders behind it. But a good investment or not, only time will tell. Well, guys and gals, millennials and madmen, that's it for today. Do leave us comments, concerns, or compliments, and don't forget to push that subscribe button. See you next time.